please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets, they trade higher in this morning's trading session.
For today, the trade is to try a long trade with a stop loss of around 11,250, which has been the recent low.
They're about somewhere between 21 and 25% for either MSCI India or Nifty, and we think it's going to be closer to 15%.
My sense is that the gross inflow would decline, and at the same time, the rotation or churn of funds, someone moving in and moving out, that also would decline.
The opening has come in the green as was the pre-market indication.
I'm worried about how quickly the rate hikes come in, because the more you delay it, the larger the rate hikes always end up being.
Big question, the big one to watch out, in my view, is the US 10-year yield.
I still believe that there will be some impact on inflation in the long term if the rupee continues to stay at this elevated level.
The key indices are a bit in the red actually, but look at the way they've come off from the high point.
Okay, today has been a bit of a disappointing day. In fact, very disappointing day for the bulls, because if you see the intraday chart on the Nifty, on the Sensex, that's one thing, of course. Just see the intraday chart. That's Nifty, of course. Intraday, there's been quite a bit of decline. Almost a 100-point intraday decline is what you're looking at right now for the Sensex as well. The Nifty Bank, where you have the weekly options expiry, that's also the other thing. But take a look at how the mid-cap index has shaped up today. 1.5% lower is what you have on the mid-cap index at this point in time, trading at the lowest point. So not looking good at all at this point in time. 1.2% lower is what you have on the mid-cap index, and advanced decline ratio looking rather weak at about 1:2. So not looking good at all. Well, how should you position yourself in this last hour of trade then? Ashwini Gujral and Mitesh Thakkar now join us with closing strategies. Good afternoon. Ashwini, thoughts on the last hour and what would be your individual stock calls?
So the market has decisively proven again that supports mean nothing in a bear market. And the other thing is that rupee is now at 72.79. So the last hour could be fairly brutal because we've broken key levels. The macros are back to worsening. And today, something else is very interesting, that now large stocks are creaming through their 200 DMAs. A good case in point is IndusInd Bank. It came and tested once, had a small rally, and now is again going through the 200-day moving average. Not only that, one would expect that even HDFC Bank at 1980 would have gotten some support. On the contrary, it continues to move lower. So, let's get serious. This is a very, very serious correction, and now we are opening up another 300 points on the Nifty, probably another 800 to 1000 points on the Bank Nifty. So there is no sign of real support. So last hour, get short on the market and see what you get, because you're going to get surprised on the downside. I don't think on the upside. Individual stocks, IndusInd Bank is a sell with a stop of 1840, target of 1800. HDFC Bank is a sell with a stop of 1980, target of 1955. And Motherson is a buy with a stop of 289, target of 302.
Okay, so one buy and two sells. The market's giving levels rather quickly now. 11,250 is gone, and how? 55 points lower. Surabhi is also joining us now. Surabhi, good afternoon.
Good afternoon. Sorry, running a little late, just sort of getting settled in. Lots of views from JP Morgan. I'll get to that. Your thoughts on this absolutely India-specific decline that we seem to be in the midst of at the moment. I mean, our sister markets did much better, but what do you make of this right now?
Yeah, I think today you can't blame the globe, right? So every day you can say Hang Seng is down. Today, Hang Seng had a big rally. In fact, most of the Asian markets. So we are the worst performing market today. Perhaps you can blame crude, but crude is also not higher than where we left at 330. It's not as if, we've gone to 81 or something like that. Rupee, of course, remains a bit of a problem point. But the other big problem is that large banks and the large stocks, the selling continues in the HDFC twins, the Bajaj twins, and that is really, getting a bit overdone now. Perhaps the Nifty Bank is about to break Surabhi 6,300. So last hour could be crucial for Bank Nifty.
Also, Anuj, just very quickly, I mean, today's sell-off is an all-encompassing sell-off. There are large stocks that are down. There's a mid-cap index that's now almost collapsing to 62, 70 points. Sort of any guesstimates on what really is happening here? Because I don't want to use the kind of words like capitulation, etc. But levels are just falling as we speak.
Yeah, you know, Surabhi, two days back, I think it was, and even yesterday, I was getting, you know, some kind of criticism for the market commentary looking at the levels. The fact is that this is the market which is now, you know, you have to respect the market. The market's been telling you for some time now that it wants to correct. It wants to correct the excesses of August. And sometimes when you correct the excesses, you in fact end up, you know, overshooting. Just on the way up, like we did in August, we are overshooting on the way down in the month of September. That's par for the course. The concept of mean reversion will play out at some point, perhaps in October. But for now, the market wants to correct. And there's absolutely no doubt about it. 11,225, in fact, as we speak.
Yeah, absolutely. The question is whether 11,200 now is going to be holding, or is it another line in the sand? Okay, let's get some more trading ideas in then. Mitesh, good afternoon. What do you think of this big decline that we're in the midst of? And of course, trades for the last hour.
Yeah, good afternoon, Surabhi. So I think we were looking at some kind of declines, you know, specifically saying that the Bank Nifty could head towards 26, 150, 200 zones and then eventually at 25,800, 850 levels. So I think there's some more downside left. The Nifty has, you know, a gap support around 11,200. So the way we were approaching Nifty was that below 11,250 we should test 11,200. We are close to that. And if that breaks 11,070, 11,075 should be your next level to look at. And yes, it will happen with volatility. So I think choppiness will keep on coming. For the time being, I have one buy and one sell. A buy on Gas Authority with a stop at 377 for targets close to about 400, while ICICI Prudential is a sell with a stop at 357 for targets of 335.
Okay. Ashwin, just coming back to you on Bank Nifty, 26,318 is what we have at this point in time. I was just looking at some of the options data for today's expiry. 26,200 put is where, of course, you have the highest open interest. So perhaps that should be safe. But for last hour, is there any level that you have in mind?
You know, my sense is I look at charts and that is how I gauge things. You know, the way Axis Bank, State Bank, IndusInd Bank, HDFC Bank, it's not just one bank. So my sense would be that the expiry may not be able to take you higher. If anything, you should go lower because even 200 DMAs are now not proving to be very effective as support. So my sense is that we should probably close down 175, 180 on Bank Nifty because the momentum is on the side of the bears. Any sort of 10, 20 point rally that they get, they'll come out and sell. And in general, the expiry accentuates the trend. But by now, I think all of the supports that people were looking at are gone. So I don't think you should be hoping for upside.
Okay. Well, SP Tulsian of sptulsian.com is also with us. And Amrish Baliga in our studios. Mr. Tulsian, good afternoon. I wanted your thoughts on the kind of selling that we are seeing in the large financials. There's, of course, the HDFC twins, Bajaj Finance and Bajaj Finserv continue with the weakness. In fact, this month, Finserv is down 6%, down 12% from peak. Bajaj Finance even more. IndusInd Bank has seen one-way selling over the last few days. Same with Kotak. Your thoughts?
See, Anuj, if you take a call on all these banks, which you have said, or maybe the financials, including Bajaj Finance, they have all been the investee in the form of the DIIs and FIIs. And if I just see the FII numbers and the kind of, volatile figures which we see, sometimes yesterday we have seen 1100 crores selling in cash and 1200 crores buying in options in F&O. So I think that, and if you take a call on HDFC twins, more specifically HDFC Limited and HDFC Bank, or maybe Kotak Bank, in fact, in all these companies, you have the FII holding closer to about 55% to 65% or maybe 70, 72%. So I think this is more seen maybe either as a currency hedge. They want to, either create the positions in future. They may not be wanting to get out of the stocks, but selling is definitely seen. And in fact, I have been touching on this point of the huge premium, which we have been seeing, which starts of the series when the Nifty future premium was at about 80 points. Bank Nifty future was at a premium of about 200 points, which were all seen unwarranted, which indicates that the cash selling is seen and the futures are the long positions corresponding positions taken in long positions in future. So it I think seemed to be more of the play by the FIIs in the form of the selling in the cash segments, which we see coming in every day in the afternoon time. In fact, for the last in this week, for the last 3 days, we have been seen happening that. So maybe few of the corporate lenders where we have been keeping the cautious view, like Axis Bank, ICICI Bank, and SBI, where we have seen the good amount of correction having taken place. But those things seem to all three corporate lenders, which have risen by about 15% in last 1 month or so, seem to have bottomed out, or seem to have whatever technical positions or selling has to happen. But these are the larger ones like Bajaj Finance, Kotak Bank, HDFC Bank, IndusInd, Yes Bank. They are all seen selling, coming in more from the FIIs. And in fact, on the ground, when you check with the dealers and with the traders, I don't think that much selling is seen from the DIIs in these counters. So maybe we are seeing the relentless selling continuing, and I hope that, because we have been expecting that probably you cannot see all 4 weekly options expiry to happen on a week note. We have already seen 3 weekly option expiry for the bank happening on a week note. So I presume that probably maybe this should end with this weekly expiry option today, or maybe then, if you don't see any relief coming in on Friday or on Monday, then the whole washout will be seen for all 4 weekly options expiry for the Bank Nifty in this series.
Okay, as we speak, in fact, we're about to break 26,300, 26,300, just holding on by the skin of its teeth. Okay, now below that, I don't know if that would bring some fresh selling pressure, but for now, 26,300 is gone on the Nifty Bank. Amrish, good afternoon. So let's talk about some stocks first. Your thoughts on the way Reliance Group stocks, the ADAG pack that is, has completely collapsed?
Yeah, I mean, we had that news as far as Reliance Communication was concerned yesterday, that they would be finally be exiting completely from telecom going ahead and concentrating on real estate, which anyway, I mean, overall, if you look at the real estate market, that is not doing too well. So they are actually, I mean, possibly jumping from fire, I mean, from the boiling pot to the fire. So I think, and at the same time, because of the sort of reduction in expenses ratio for the mutual funds, I think that is, had an effect on the Reliance Capital and other stocks. So I think overall it's headed down only.
Yeah, Mr. Sen, your thoughts on the way Reliance Infra has fallen 10% today?
See, Anuj, if you see the statements, having come in for all the companies, it is just a change of track. Since you have touched on Arcom, first the company, when they exited from the telecom business, they said that now they are into the high EBITDA margin business of the enterprise. So enterprise and the undersea cable kind of things and all sort of things. The data centers and all sort of things. And now even that is seen and giving indication, as Amrish has said, that now you are converting yourself as a real estate company, which is again a compulsion on you to monetize the assets which you have been planning for 4, 5, 6 years. Come on, Reliance Capital, again, the hit of the reduction in the AMC, this SEBI, mutual fund charges. And again, on the Reliance Infra, if you really see the situation, I don't think that things are very much comforting there as well. Because you are now, trying to clutch the straws, to sail through these big companies where you had a good kind of projections and, the roadmap having given them. So I think, and again, you generally see this volatile movements happening in these stocks. Once they move up, which you have seen in the recent past, in last 2 weeks, they've risen also. So the trading positions again starts coming out of these stocks as well.
Sandeep Bagle now joins us for some fresh technical picks. Sandeep, good afternoon. Your thoughts on the day, and what are the stocks that you're trading now?
Afternoon, Anuj. I still see some more downside. 26,200 on the Bank Nifty, 11,150 on the Nifty at the least. Stock specific, I would go with a sell in a Bata, stop loss of 987, target of 960, and a sell in the Reliance Capital, stop loss 372, target 351.
Okay, Sandeep, thanks a lot for those trades. That's some trades from Sandeep Agle. Mr. Sen, the one sector which has sort of done well today is steel. JSW Steel in particular is up 2.5%. Tata Steel is up. SAIL is up. There was news that the government is looking at fresh import duty. Of course, all the rupee measures are still, being thought about. You reckon that's still a good area? You've been bullish on some of these stocks.
So, I think they have the multiple advantage from all the angles. First, to start with, I don't think that they are affected by the trade wars between US and China, number one. Number two, in China, ahead of this winter season, we are seeing the production cut that is also having confirmed. And once this monsoon having, coming to an end in India, we will be seeing the price increase and better offtake. In fact, in the month of July to September, you always see the steel prices correcting by about 6 to 8 months. First quarter seem to be the the second quarter always seem to be the lean for the steel sector. But this time the situation has been different. Prices have only fallen by about 2.5%, and even there has been good offtake. So I think overall, if you really take the situation, and that is what we have been seeing with the higher production by JSW Steel, Steel Authority, Tata Steel, and the interest having shown by all the existing steel players in these NCLT cases also. And I think this cycle is going to remain, sustained for next at least couple of years, even in India and even on the global front. So overall, things are positive for the stocks like JSW Steel, Steel Authority, Jindal Steel and Power kind of stocks.
All right, Mr. Sen, we thank you on that note today. Thanks a lot. We'll of course talk to you on Friday now. Just one more word from you, Ambrish, on a stock like Jet Airways, which is down another 5.5%. What next here for a stock which has had such a steep fall?
No, see, I think there are two things which can happen in Jet which can save it. One is to get a strategic investor, which I think is very, very difficult at this point of time, looking at the situation. And I think the other savior for Jet Airways could be, if the oil prices again come down below 70. And both these seem very I think quite difficult, scenario to be looked at. So looks like Jet should still go down further. I just hope it doesn't go the Kingfisher way.
Okay. All right. Let's now go back to Delhi. Surabhi has two more guests with her. Surabhi?
Yes, that's right, Anuj. Our next set of guests from the JP Morgan India Investor Summit, we have with us Pedro Martins, who is the head of emerging markets at JP Morgan, and we also have with us James Sullivan, who heads research for Asia ex-Japan. Gentlemen, thank you so much for taking out the time and talking to us. And you look at a region which is making headlines for all kinds of reasons, really. So, Pedro, let me start with you. What we're seeing right now is this sudden new wave of risk aversion towards emerging markets. Now, whether it's trade wars or, or something else, the currency sell-off that started off, is this just a passing phenomena? Or do you see this spiraling into something a little more significant?
Yes, I think the weaknesses in the currency market are very important alarm bells. Okay, so we've got year-to-date emerging market currencies down 13%. So India is not alone into that. The outliers are the Argentine peso, the Turkish lira. Seeing at second level, you can see the South African rand, the Brazilian real, the Russian ruble, and then on a third level comes India rupee and the Indonesian rupiah. Okay. So I think the core reasons why those currencies are weak, it's not necessarily trade. It started before that. It is the exceptionally strong moment that the U.S. economy is facing. GDP growth of 3% for this year. EPS growth in the equity market of 25% this year, and the Fed tightening the process. So in those moments, what usually happens is that investors' scrutiny about fragilities increase. And then we're back to the 90s, right? So two things, One, which are the current account and nominal fiscal deficit countries that offer fragilities. As a ballpark, we look into the -2% of GDP in those both axes. I think the good news for us trying to answer your question is that 75% of MSCI emerging market equities don't fall into that category. But you've got a few countries that have those twin deficits, right? So obviously Turkey and Argentina were there. You have South Africa, you have India, Brazil borderline, then a little bit Indonesia, Mexico as well. And in those, the majority of those countries happen also to face elections, right?
Sure.
So either this year and
Sure.
into next year. So I suspect the noise of exceptionally strong dollar, exceptionally strong U.S. economy will continue to create some pressure. Now, what's the consequence of that? The consequence is a process, right? Currency weakens, inflation pass through, you have to tighten domestic monetary policy. That implies, most of cases, growth is slowed down, which makes the budget balance a little bit tougher to achieve. And then when necessary, you knock on your Congress, ask for help, say I'm doing my part, I'm cutting expenditures, but I might need temporary taxes. And when extreme, you knock on the IMF door and ask for money. I don't think...
That sounds like a very vicious circle. I mean, are we going to go there, or
No.
sort of, yeah?
So the good news, I said before, 75% of the index is not there, and I don't think India is anywhere close to that. So the only country that fulfill all those steps here today has been Argentina.
Okay, so your thoughts, James, on what's been going on, because the fear right now in the India market is, even today is such a weak day for us here in India, though actually Asia has been largely stable, European markets are trading fine. I think the worry is whether India will play catch up with the rest of the EM complex on the way down, because we haven't corrected as much. Is that a possibility?
I think there's some critical differences for India relative to the rest of emerging markets. And ultimately, investors come to emerging markets for growth. And India, with one of the fastest growing economies in the world, has outperformed through the first part of this cycle for very real underlying fundamental reasons. One of the key things that we discuss with investors quite often, and at this conference as well, is this idea of relative growth rates of the U.S. versus emerging markets. I think what we have to do is take a step back and realize that the U.S. government, through its tax cut, effectively poured gas on a fire, and we're in the process of burning that gas off, which is leading to this concept of U.S. exceptionalism. And can the U.S. continue to outgrow by so much? If this is a process of gas burning off a fire, that's going to drop back to trend as we enter 2019 and offer the opportunity for emerging market outperformance again.
So do you see a bottom to some of this anywhere in sight, close by?
The two factors that we're looking at most closely are A, relative growth rates, and then B, currency trends, and obviously they're very interlinked. One of the biggest shifts that we see today versus earlier this year, in January, markets overall were very short the U.S. dollar. We're 180 degrees opposite to that position today. From a broader emerging markets perspective, investors were long after a very strong performance in 2017. Now we've seen significant outflows on a year-to-date basis. India is a slight exception to that, obviously given its outperformance. And so I think that we're starting to see the dynamics lining up for potentially better emerging market performance going forward. Overhanging that are issues like trade concerns.
Okay, so to come...
If I may add to that, because that's a critical point. So how far advanced into value destruction are we into that? So we talked about currencies. Let's do a deeper dive into the equity market. We're seeing the combination of three interesting things by now. So number one, the price collapse we saw on emerging market equities has been in excess of the negative earnings revisions. So that means that valuation became more compelling. On an absolute basis, emerging markets is trading back to its historical average, meaning that all this extra liquidity pumped by the G4 central bank's balance sheet expansion has not been distorting any more valuations for yen. And the second one, which is even more compelling, lies in the fact that relative to developed market equities, set aside the US, which is off the charts, the discount now is close to 15%. Okay? The other thing we're seeing is positioning. So the share of emerging markets over global mutual funds, it's now at 7.4%. Historical average is 9.2.
Okay.
It's not much percentage-wise, but the base is $18 trillion.
Sure. So I get the sense hearing both of you that at some point this is going to turn. This very easy short EM currency trade should turn. The question is, what next for India? Because India hasn't fallen as much at all. Do you see this correction deepening here? I think your India strategist, I think the base case scenario for the Nifty is 11,300, if I'm not mistaken. What next for the Indian equity market?
Okay. India has two very good things for now. Number one, if trade noise escalates, you're going to be disproportionately less affected than the rest of the year. And that's pretty much what has been happening over the past 2 quarters, give or take. Second, India has a very strong base of earnings growth. So everything else constant, you might grow here 15% your earnings. Why? demographics, infrastructure spending, and the reforms, which in essence is government shrinking, giving away for the private sector to perform. Now, having said that, what we think is going to come next, call it in the next 1 or 2 quarters, it's a bit of a headwind. Okay? Number one, you have the election calendar, right? So state assemblies, general election to next year, and that will permeate the discussion of fiscal, right? So what does, let's say, does that mean for inflation, fiscal dynamics? Number two, it's valuation, right? So unlike emerging markets, the correction, as you say, in the Indian equity market hasn't been that pronounced. So the market continues to trade close to 19 times forward P, which is more or less 1 standard deviation above average. That was not a problem beginning of the year because everybody else was 1 standard deviation up. Now, as I said before, emerging markets is back to average. And the third one could be some external noise, meaning taxes on long-term capital gains being applied into next year, 10%. This MSCI discussion about, let's say, am I going to be tweaking the
India weight,
or not? So we suspect that on a relative basis, there is a chance that Indian equity markets could be lagging emerging markets over the next 2 quarters. Okay. On an absolute basis, as you say, we'll continue to eye returns close to 8 to 9% as per the index reference you gave.
Okay. James, just to come down to then themes within India, if we're talking about maybe relative underperformance, what would investors rather buy if they were to buy in this correction?
Sure.
Consumer stocks have started, for instance, correcting as well. What's the thought process around Indian IT companies? Because the rupee is still weak. So I don't know if that's kind of making people a little excited about the currency tailwind.
So look, I think at the end of the day, corporate India has to deliver earnings. Given the valuation levels that the market's trading at, as Pedro noted, we have to start to see positive earnings revisions moving forward. That hasn't happened for corporate India overall. However, what we learned over the course of the last quarter earnings season was we are starting to see positive revisions in certain sectors, and they're largely the INR-driven sectors. So specifically, healthcare, IT services, you are seeing material space also start to pick up, which is interesting. On the consumer side, some of the more recent data points have also been quite exciting. So you're looking at consumer confidence, both urban and rural, at its highest level since January 2017. So those would be the key sectors that we'd be focused on at this point. We don't see the U.S. dollar necessarily reversing, but if we continue to have a period of dollar stability, then we think that the INR-focused sectors will continue to perform well.
Pedro, one last very quick question. How you view the Indian government's response to the current situation that we seem to be in? Because we had these 5 steps were announced. There's some talk that we might get into some format of import curbs. There's a lot of talk about maybe there'll be a separate window to get the non-resident Indian deposit money in or not. But just your thoughts on the policy response, both from the Reserve Bank and from the Indian government at the moment.
So one step back, I think you should be proud about what this government has accomplished over the past few years. Not many emerging markets have underwent reforms in a moment of bonanza, right? And India government was pretty proactive in taking very interesting steps towards that. So that's the structure. For the very short term, we are factoring right now proactive monetary policy stance, meaning 2 hikes from now up until year end. So for us, I think that's a very good signal. If you're correct in our assessment about what's going to happen in the market, that you are trying to send a signal to the market that you care about Indian rupee depreciation and the potential pass-through of that into core inflation. So we applaud that. And on the fiscal front, we haven't seen much of that yet. So probably, let's say, oil is the one factor that you have no control and not much what to do in the short term. But from what we hear from government officials in this conference is that is sort of can call sacred institution, right? So you won't mess up with your fiscal equilibrium because you know what is at risk at time.
Okay, well, let's hope it remains that way, gentlemen. Thank you very much for your time, and good luck for the second day of the conference as well. Thank you very much.
Thank you very much.
Okay, well, there you have it, Anuj. So the word seems to be, I think, cautiously optimistic, but the takeaway is the next 2 quarters or so, maybe India is going to underperform the rest of the EM basket.
Okay, Surabhi, thanks a lot for that. But tell you something, this is what can happen on weekly options expiry day. Just pull out the intraday chart of the Nifty bank. And now, you know, I want to see that's Bank Nifty. Just, that from the low point. In fact, even the Nifty just trying to reclaim that 11,250 mark, and just a couple of stocks intraday. If we can pull out Kotak Mahindra Bank, for example, I think that would be quite an interesting chart. Just pull out that stock intraday. NIIT Tech is the other one where you've seen a bit of a move. There's a currency move happening right now, and if you see the IT stocks from the low point, there's a bit of a recovery happening in some of these names. 3 p.m. So let's see if there's any move on the Nifty Bank. It looks like it wants to protect not just 26,300, but maybe even wants to make a move higher. 26,350 is what we have at this point in time. 26,345 is what you have on Nifty Bank. In fact, has cut its losses by a bit. ICICI Bank intraday, just pull out that stock as well. That one is also looking quite interesting.